Hi, it's Phil from the CSE. I'm here today with Paul Rosen, CEO and founder of Pantry. We are currently at the top of the financial center at the CSE Media Center. Welcome, Paul.
Hey, great to be here. Thanks so much.
We've heard your name quite a bit in the industry. I know you've been involved in a ton of deals. Wanted to get an opportunity to be able to chat with you, first of all, to find out what your history is, and then secondly, kind of what you've done or what you're currently doing in the cannabis space.
Excellent. In some way, I would say my history is sort of tracking the development of, we'll call it Cannabis 2.0, in that I was one of the first sort of next generation executives and entrepreneurs to take the risk and to move my career, which was not in cannabis, into the cannabis industry. And I did that in 2012, which looking back, it seems awfully prescient now. But at the time, quite frankly, it was really just a side hustle. I'm an attorney by training, but I've really been a career entrepreneur, Phil, and I've had the good fortune of starting and operating some really nice companies that have nothing to do with the cannabis industry. But in 2012, when the previous Canadian government under Stephen Harper began to articulate the introduction of a commercial licensing program, that really piqued my entrepreneurial instinct, and my sort of antenna went up, and I began to think about how I might be able to participate in what I knew was going to be the next great thing for the Canadian economy.
And so currently you are the CEO of Pantry.
I am.
So do you want to elaborate a bit about that? Or?
I'll just quickly, if it's cool, just kind of quickly take you through what my arc was in cannabis, which will ultimately lead to how I got to Pantry and sort of some of the other companies that I'm pretty excited about right now. I started a company in 2013 called PharmaCann Capital Corporation, which got corporate rebranded in 2016 to the Kronos Group, one of the
very well-known
companies in the cannabis industry. Under the iteration, Kronos became the first cannabis company in the world to trade on the NASDAQ, and really has ascended in terms of sort of the recognition and the sort of the top of the stack of what type of a cannabis company can come out of Canada. At the time when I began that company with my colleagues, we were really just an investment company, and we were investing in early stage applications in Canada, which to circle back in time was a really difficult sort of process to handicap. There was a tremendous amount of interest in getting these licenses, but back then the government was pretty careful in allocating licenses, and we had the good fortune to identify, invest, and participate in some of the first licenses in Canada, which for me was an incredible platform to begin to understand what the industry could develop and what it could promise. And in fact, we took PharmaCann public, myself as CEO, in 2014 on the Toronto Stock Exchange venture.
Those were great times.
It was, cannabis went through sort of a few eras. There was an initial, the first era was "you must be kidding." There's an old expression that says new ideas go through a three-stage cycle. The first is usually ridicule, and I understand what is ridicule. People really looked at me and did not take what I was saying seriously when I started raising money for PharmaCann. After ridicule comes usually violent opposition. This is where people started taking me on about the efficacy of what I was doing, what sort of public harm was I going to unleash. We had an opiate epidemic crisis going on, and was this not going to just make matters worse? And then eventually it becomes seen as self-evident, which is sort of where cannabis went. But what I noticed in 2013, 2014 is that opinions had not fully formed that cannabis was going to be this dynamic next great thing for the Canadian economy. We went through a bit of a bull period, and then we had a bit of a pullback. And in some sense, some of the volatility we have now is not unlike some of the volatility we had very early on. But what I learned was sort of the economics of cannabis, which is that capital has a primacy like any infrastructure-intensive startup industry. And I sort of learned my way around the industry, learned valuation metrics, learned what would qualify a good operator from an average operator, and began to make my mark using that first company, Kronos, or PharmaCann as we called it back in the day.
As a follow-up to that, if we kind of like fast forward, we're going to kind of go back and forth in this interview a bit, but give me 3 things that you think are a good operator versus 3 things which are not so good.
Yeah. In cannabis, we have to separate what we mean by good operator, because we have almost 2 different businesses that we're running. Obviously, in the conventional operating sense, what I'm referring to is an operator that can produce a premium product cost effectively. So I'll sometimes use a simple metrics of capital efficiency. For every dollar I put into my grow, my process, my mixed use facility, how much durable revenue am I creating on an ongoing basis? And so I really look for an operator that is cutting out the waste and is able to really lower their COGS, their cost of goods sold, and then produce a high demand, high quality product that can be sold into the marketplace. The other side of that is developing a platform to sell it into the marketplace. So the grow room is where it starts, but the grow room is not a place to develop a business. It's just a place to actually grow your product, maybe your input or your final product. So then we have to see some aptitude in actually taking your product and getting it to market. In this case now onto dispensary shelves or into patients' hands. But the third operational acumen that's highly relevant and a lot of early operators in cannabis did not have mastery of is mastery of capital markets and capital. And this is a whole other skill set. So I will say basically the cannabis industry in its early years really separated into two types of operational acumen, but rarely bundled the two. You have your good cannabis operators, very good at growing, but very new and naive and not experienced about how to raise money from investors, how to take a company public. And then you have a lot of groups that had early on demonstrated capital market savviness. Some of these companies I've had direct involvement with, but by no means did their background create confidence that they were great cannabis growers. And we saw really that it was one or the others. And we see even in the US, a lot of the big MSOs that we have now name recognition, these were capital market savvy organizations more than great growers. And the great growers often didn't find the capital market platform to find. So it's important to separate. A good operator from a capital market side means cutting out all the dumb transactional activity that have been the sort of the foundation of the last couple of years, buying everything in sight, spending money like it's an infinite resource. But from the other side, the important sort of the kitchen side, the production side, producing a quality product at a competitive price with viable distribution and branding strategies to support the elevation of that product into the marketplace.
Okay. Excellent answer. In terms of, as a kind of follow-up to Pantry, tell me what that does and what else you're engaged with there.
I mean, Pantry is a great company in that it's a passion play for me. I've been involved in numerous public companies in Canada and in a lot of the U.S. operators that are operating in Canada using our exchange. And a lot of these companies were financial service companies or becoming sort of vertically integrated operators. But I start with the proposition that I am a consumer first and foremost. I was a cannabis consumer before I was a cannabis executive or a cannabis entrepreneur. And for me, the category across global cannabis that has the greatest potential for increase in market share and improvement is the entire edible category for a whole number of reasons. I'll start with the basic thesis that the safest way to consume your cannabis is to eat it orally rather than smoking it or vaporizing it. And I'm not diminishing the utility, the efficacy of smoking and vaporizing. I've certainly contributed my share to both smoking and vaporizing, but as I embrace wellness and health as a uber goal of mine, I'm finding that smoking is inconsistent. So if I could control my dosage and my titration in an edible, at this point I would rather go through my liver than my lungs. And there's a lot of promising research that the bioavailability of a cannabinoid is enhanced when it goes through your liver than your lungs. The problem, and a lot of this, Phil, is not relevant to Canada because, hey, we don't even have edibles yet in 2019.
Not officially, at least.
Sidebar, outrageous, but whatever. We'll let the government lurch towards the inevitable outcome. But I'm aiming Pantry at a fully mature marketplace. California, mature in the sense that there's no limit on product offerings around, except for protecting child safety and public safety. So, but when you go to a dispensary in LA, and I think I've been to just about every one of them, I'm at a point where I'm like Norm from the character from the TV show Cheers, where they know my name when I walk in, Paul, because I go there a lot because this is the front lines of what's going to happen. And we're trying to understand, where is cannabis going? Not where was it, not where is it, but where it's going. And I see the food category growing, but it's a broken category now. It's a broken category because we're basically taking cannabis, which we all believe and know is a wellness product, and in the food category, we're wrapping it up in all these non-wellness ingredients. Processed sugar, high fructose corn syrup, trans fats, I'm just getting going, preservatives, all this other stuff, which I would never eat except for the fact that it's got THC in the middle of it. That's of interest to me, or CBD, that's of interest to me. So I just want to take our wellness product, which is cannabis, and stop wrapping it up in, cancer, diabetes, and heart disease, and wrapping it up in things that are actually good for you, adaptogens, chia, goji, spirulina, et cetera, et cetera. Second thesis is that food should be designed by chefs. Just going out on a limb here. Experts in kitchens who have got a career in creating delicious, nutritious, and in-demand recipes are at a premium in the food. But in the cannabis industry, we're not really having chefs design our food, because we're having the head of marketing design our food, because they're looking at it as a zero-sum game, as how much margin can we make as quickly as possible, rather than how can we make a product that's going to be adored and loved. As long as THC is the headline, in other words, an edible is sold based upon how much THC is in the edible, we got a broken market. That would be like selling alcohol based upon how much alcohol is in the bottle, i.e. the top shelf product would be the one with the most alcohol. In alcohol, we know the bottom shelf product is the one that has the most alcohol. When you move up shelf, i.e. up market, i.e. up price, you're introducing other ingredients that are not getting you drunk, but they're adding to the overall experience, which is exactly what Pantry is about, the overall experience. It's not about getting high. We are a microdose philosophy. It's about having delicious food paired with microdose cannabinoids.
Right. And are there certain food categories that you want to address specifically within the food for Pantry?
We have to, when you're trying to ferment a small revolution, you have to do it incrementally. So I spend a lot of time in dispensaries because it would be obtuse of me to ignore what product categories are selling right now.
Sure.
So what really is selling in the food category is candy. Sometimes I refer to it as, infused candy, gummy bears,
Sure.
chocolate, beverages, sugary beverages, what have you. And so those are the categories that we have launched with, because they're known categories. But within each category, I'm going to argue the best product on the market, best being defined by best tasting, and the ingredients have the greatest provenance, a real, like every ingredient sourced artisanally for a specific reason. But ideally, I want to break out of the confectionery category and just be, we're a food company. That's why we don't call ourselves Pantry Cannabis. We call ourselves Pantry Food, meaning that some of our products they're standalone. They don't need cannabis to be delicious, edible, and in demand. So we launched Keto Bites about 6 months ago. This is a revolutionary product. It's the first true keto product in cannabis, microdose. We have gourmet chocolates, but they're not like Hershey bar chocolates. They're like, if you are artisanal single item chocolates that are really, just quite frankly, a cut above what's available in a dispensary. We have a version of a gummy bear, but we call it a patafui because it has no preservatives, it has actual fruit puree, and we have an infused olive oil hitting the market shortly in partnership with Frank and Frank, 2 chefs out of Brooklyn, New York, that have one of the best-selling olive oils in the country called Frankie's Olive Oil at Whole Foods. So what I want to say, we see it across the whole category of food. I'm not planning on infusing, salmon or lake trout or filet mignon, but I'm looking at all the things that make sense that consumers would want to pair as part of their experience.
And on that note, we're going to take a quick break from our sponsors here.
Broadcasting from the heart of Toronto's financial district at the top of First Canadian Place, CSE TV is your trusted source for what's happening in capital markets. Our #Finance podcast series gets you exclusive long-form interview content with visionary entrepreneurs and CEOs of companies in the news. The CSE's On the Street segments get you up close and personal with many of our listed companies. And don't forget that you can find the video version of this and all our media on our CSE TV channel on YouTube. For instant notifications, subscribe to CSE TV now.
And we're back with Paul Rosen at this point. Paul, thanks for again coming to see us.
Pleasure.
I wanted to follow up on maybe some further food trends that you think will be more prevalent in this particular space.
Let's talk about actually if it's. I mean, I think the food is the trend. Food and beverage right now is probably less than 10% of the 10% of the entire consumption of cannabis is less than 10% is taking place through food and beverage. I see that increasing to 35% from where we are right now. And I see a lot of momentum around that thesis right now. Even we'll call it the vape crisis right now, which is not a full-blown crisis, but it certainly has attracted, with good reason, the attention of regulators. This is a further reason to try to simplify down to something we all understand. Food and beverage, a socially acceptable form of consumption. And I think that the category will grow. Within it, I predict Pantry will become one of the most recognized and trusted brands within the food category of cannabis. I think, though, that there's trends that are shaping the entire cannabis industry that I would be delighted to discuss with you, that I think are going to affect the investor fortunes and the operating fortunes of several companies. And I was able to speak last week at the MJ Biz International Conference in Toronto, and I went through what I thought were some top trends that should have an influence on our industry going forward. And it would be great to discuss those with you and seek some opinion from you as well. The first trend I unpacked, and not to be too grim reaper, was catastrophic failure, in that I think this is the year where a lot of companies that are continuing to lose money quarter after quarter are going to find it increasingly difficult to raise capital. And the one thing about a cash losing business is it always needs the capital markets to keep on funding it, whether it's Uber or Tesla or any other company.
Right.
If you're going to, Amazon turned out to be one of the greatest companies we'll ever see in our life, but it had to go through about an 18-year cycle of losses before it established massive profitability, and it needed the investing public to continue to support the thesis. My view is that this is the year where we'll see some cracks in the foundation, where some of the, especially in Canada, production assets are not going to find capital, and they're not going to find an M&A partner, and they're going to, unfortunately, have to give up the goat a little bit on their business plans. I think we saw some cracks in the foundation this summer, some undermining of the overall confidence of where this industry is today. And make no mistake, I'm the biggest bull out there. I am rah, sis, boom, bah. But we're going to go from every cannabis company is great to let's start identifying the great winners and separating them from the not so great companies. And some of those cracks this summer would be, confidence crisis, the CannTrust debacle. CannTrust had a reputation, including amongst pretty much insiders on this industry, as one of the best run companies from a compliance, from a regulation. And so the fact that the company that had the perception as one of our best run turns out to be poorly run, and in fact appears to have broken the sacred covenant with the regulator, has really caused a lot of people in the industry to say, what else don't we know about these companies? And that's compounded by the fact that a lot of money was lost on CannTrust. So nothing scares money more than big losses, and makes the investor less likely to write the next check. Second would be my colleague Bruce Linton being terminated as CEO of Cannabis Growth Corporation. 2 weeks earlier, I saw Bruce on stage at the World Cannabis Congress with Martha Stewart. This was an entrepreneur in full flight.
That was in New Brunswick, if I recall.
It was in New Brunswick.
Yep.
And that event, and I like Bruce a great deal, but there was the perception that he was sort of our Thomas Edison meets Steve Jobs, and then he was terminated, and quite frankly sort of unceremoniously, and shortly after Constellation Beverages announced that they took a $57 million write-down, and Canopy took a $1.2 billion hit in the quarter. So all of these, and then a third example would be the Food and Drug Administration sending out warning letters to companies like Curaleaf about not making untested representations about what their products may or may not do, like say cure ALS or stop dementia. So all of these things has created what I call the summer horribilis for cannabis companies, where we're a little bit, where are we right now? And that's going to make it harder. So I predict this is the year where we're going to have some companies that actually fail, and shouldn't spook anyone about the long-term prospects of the industry, but it should cause investors to start being a bit more particular about where they invest and where they do not invest.
And I agree with that, considering that you did mention the whole CannTrust thing. we are at the birth of an industry altogether. We're not even in 1 or 2 inning number, if from a 9 inning period type concept. So established brands aren't quite there just yet in terms of mass global brands. So I think that's an opportunity. But there, as you say, there are going to be failures, and respectively, the regulations and the companies, and more importantly, the regulators, are going to regulate accordingly.
Yeah.
So
Indeed.
what you're going to see is likely some sort of ebb and flow in terms of potential companies, and reflective to that is the number of listings that come to the exchange. But at some point, we'll get past that.
Yeah, these are necessary, inevitable, and predictable growing pains in any new industry. I have to remind everybody, in December 2012, when I threw my hat in the ring, there was no there. There was no industry. There were no unicorns. There were no billion-dollar babies. Canada wasn't exporting to 17 countries. The CSE hadn't listed 100 plus U.S. cannabis companies. Mm-hmm. So we have moved at breakneck speed, and we have done something that I think business analysts will study the formation of the Canadian cannabis industry and see it as one of these seismic moments in business development. But we're at a point now where we're going to have some broken eggs. It's all part of the process. Mm-hmm. And I get asked frequently, is this like the dot-bomb era when the dot-com economy had its first sort of wobble? And it's different, but there are some similarities. The similarities, and the most important similarities, are no one doubted the long-term durability and value of the dot-com economy. It's just that some of the companies in 2001 were a little bit ahead of themselves as to what they were going to deliver. Mm-hmm. But the thesis was always intact and was never disrupted. So looking back, anyone that predicted that tech and the internet wasn't really a big thing in 2001 would have been insane and would have missed the great internet revolution that followed. Cannabis is the same thing. The cannabis economy, I predict, is bigger than even the most optimistic estimates we've heard. But there is still going to be a lot of blood shed, and I've said it before and I'll say it again, more money is going to be lost investing in cannabis companies than is made going forward. Straight up. So It's not to say that fortunes will not be made. Fortunes will also be lost.
But fortunes are going to be made if you pick the right company, and that requires due diligence and knowledge and understanding of the industry, and more importantly, where it's going.
It requires I really think this is a key thing, is unless you are putting in the time, and the time is full-time, multi-year, near obsessive study. I'm constantly, I would say, one of my hallmarks of my success as an investor, I've invested in about 150 plus cannabis companies, is trying to have an edge on information. That's really the only edge I can get, is to try to learn as much as I can every single day, and to inbound as many companies as I can, and to look at them carefully, and from that create sort of a process to metrics, why I like company A more than company B. But for investors that have not spent years doing that, it's real simple. Don't turn your back on the industry, but invest with a professional. Invest in an ETF, invest in a fund, pay up fees, take out the risk of picking one company out of the pile and maybe missing, and let other people, and not myself, I don't run other people's money, but let other proven managers that have spent the years building a valuation metrics and an operating team metrics to really say, I really like this company for the following reasons, and then to diversify around that. Otherwise, you're really basically gambling.
Yeah, and there are a slew of cannabis professionals that run funds, hedge funds,
but they're not all created equal. And I would even say, just because you're in a fund, don't stop there, or don't say, well, I've taken Paul's potentially good advice. Be careful which fund you pick. They have different thesis, and look very carefully to see what are the bona fides and the antecedents of the fund manager. What have they really done? I can point to a lot of my successes and my failures, because they're both somewhat important, that allow me to assert some authority in what I'm doing. But what I have undeniably done is expose myself to this industry at a macro level year after year after year, and I just simply do not stop. I'm relentless in terms of exposing myself to information. I think that gives people like myself a competitive edge as we go forward.
Okay. We're going to switch gears here a bit. I want to ask you about a couple of investing themes. Where do you think, if I was to give you $100,000 now, what type of segments should I be investing into? We had kind of talked about some technology, but then there's a series of categories within the cannabis space that may be hot.
That's a great question, and it's something I contemplate myself as I rotate my capital. So the first thing I'll say is, if you're going to invest $100,000, don't invest it all in one company.
Okay.
If that's what you've decided your exposure to cannabis growth opportunities are, I would try to separate it into at least 3 to 4 investments and things that I would be looking for. So my belief is that Canadian cultivation, our best days are behind us. Quite frankly, I'm pretty much not investing in Canada anymore. Not because I don't believe that Canada is durable. I just think the years of the major alpha that we experienced are behind us. And once you've had that alpha a few times, you sort of get a taste for it.
Sure.
So I would be looking at markets outside of Canada that are still in nascent development. Quite frankly, I think, and I vote with my wallet and my time, the most accretive market in the world right now is the United States cannabis market, because until you have harmonization of federal and state programs, that sort of big force multiplier event that's going to send that market onto overdrive has not yet happened. So I would be aiming at the U.S. cannabis industry, and then I would look carefully at some of the MSOs as one of my strategies, the multi-state operators. I won't pick names, but amongst those bigger market cap companies, I'd be really looking at their balance sheets carefully. I love cashed up companies with licenses in multiple states if they're not bleeding through money too irresponsibly, and I would say about half your capital should go towards picking 1 or 2 MSOs that you love their thesis, you love their operating team, you love their balance sheet, and then the rest I would put into a higher risk. Those are public companies that have liquidity. Presumably you'll be able to trade in and trade out if the winds change one way or the other. And the other part of my money I would allocate it, and this is just me, I would allocate it to more of a higher risk private company, and I'd be looking for emerging spaces. So I look at moving my capital, either shifting it by geography or by asset class. By geography, it means leaving Canada and exporting my capital to emerging markets, whether it's Colombia, Israel, America, or other emerging markets. And by asset class, it means moving from cultivation upstream to CPG or advanced medicalization. So a pantry would be an example of me living both of those. I'm doing it in California. That's a geographical shift from asset class from Canada and the United States, California specifically, and pursuing an asset class. I'm not going to be a cultivator. I'm not going to be a processor. I'm going to be upstream cannabis, a manufacturer, focusing on brand and getting my product on shelves and letting other people do all the indoor farming around that.
So you mentioned MSOs and various states and stuff like that. Are there, aside from California, which you've clearly laid your bet on, are there other states that you like and or think have great opportunity?
I like all cannabis markets where you have a combination of factors: a on-site regulator, a market that's medical with the potential to activate to recreational, and at least early on, sort of a scarcity of licenses in the early stage, allowing those first companies to get a little bit of an operational head start. They're going to need it because it's a challenging industry. And then I look at population, so of course, as long as we have I think all your listeners probably know this, but the U.S. cannabis industry operates as 33 siloed states. There are 33 states that have either medical and/or medical and recreational. And aside from the Farm Bill stuff and non-psychoactive, you can't move product from one state to another. So within that context, I'm interested in states that have larger population bases for the fundamental macroeconomic reason that there's more people that might want to consume my products. And when I talk about an underserving of licenses, I look at states like New York State. It's a small market now because they don't have recreational cannabis yet. Their medical program's small, but it's New York State and there's not that many licenses yet. So right away on my scorecard, it is of interest to me. By contrast, a state like Oregon, smaller population, massive amount of operators already. Not to say that you can't make your mark there, but from a macroeconomic perspective, some of the dynamics are beginning to get less attractive to me.
Okay. Last question. In terms of, we talked briefly about hemp and stuff like this. So we've fundamentally talked about cannabis. Where do you think the hemp market is? What's the opportunity? Are you invested in that? And should people be looking at hemp versus cannabis?
Yeah, I'm really into this one plant philosophy, grandmother, grandfather, father, mother, whatever you want to call it, that I think we're talking about a plant-based economy here. And hemp's huge. Certainly, I'll just divide it rather than using terms like hemp and cannabis. I'll use psychoactive and non-psychoactive. I prefer those terms. And hemp, I always point out the 1914 US dollar $10 bill is printed on hemp. Right, and
I didn't know that.
It depicts American farmers growing what can only be hemp based upon the agronomy and the height of the crop. It's known that the founding fathers, George Washington, Thomas Jefferson, farmed hemp. So hemp is the sleeping giant of our economy, not just from the cannabis side, but from all the things hemp can do. It can replace or at least augment materials like plastic, materials like steel, textile. It can remediate soil if soil is being a biohazard, and it can also produce, in some instances, full spectrum or at least part spectrum CBD, as well as other cannabinoids. So I would say you cannot look at the cannabis economy in isolation from the hemp economy. On the other hand, due to regulations, they're operating in parallel, if not fully integrated forms. And there's these paradoxes. Here's a great paradox. The U.S. cannabis industry, which is federally illegal, has now authorized CBD as a legal product under the Farm Bill. Now, there's rules about whether you could put it in food or not, but CBD per se, as an isolate, can now. And then progressive Canada, where we have federal legalization, CBD is still a regulated product that can only be sold through an LP. So these are the sort of like policy paradoxes that will straighten themselves out. And then we will see, I believe, just hemp and cannabis being viewed as two sides of the same economy.
So for our viewers who are listening, how do people get a hold of you?
Well, I'm not hard to find per se, but I don't have an Instagram or a Facebook. I'm on LinkedIn, and I'm easily found if you contact me on LinkedIn, if you search my name and the word cannabis, you'll have about 11 pages of Google to wade through. But LinkedIn's an easy way to connect. I always respond. And if you happen to be attending Hall of Flowers in Santa Rosa, California, next week, I will be at the Pantry Restaurant, the Pantry Bodega, the Pantry Dispensary, and the Pantry Booth.
Oh, wow.
I also speak at most major conferences, and am available for any young entrepreneurs that are looking for guidance and wisdom in our industry.
Thank you very much for your time today, Paul. It's been a complete pleasure. We really appreciate your time. And once again, it's Phillip Shum from the CSE here with Paul Rosen.
Hi, it's Grace from the CSE reminding you to make sure to follow us on social media for the latest updates on our listed companies as well as new listing alerts. For more in-depth content, be sure to pick up our free quarterly magazine, Public Entrepreneur, available online at thecsc.com.